Welcome to Mayor Brown's Global Financial Markets Podcast. Each 30-minute episode is designed to help listeners better understand the legal issues that impact their business given the ongoing uncertainties in the financial markets worldwide. Speakers from across Mayor Brown's practices and offices provide their timely insights on a wide range of topics, including finance, financial services, and insurance regulatory developments, securitizations, and litigation in the United States, the United Kingdom, Europe, and Asia. We hope you enjoy the program.
Hello, listeners. We've chosen to call today's topic, It's That Time of Decade, BE-12 reports due for certain cross-border investments, because we'll be focusing on a reporting requirement that is most definitely not an annual requirement. It's one that happens every 5 years, and so this will be the first one of the 2020s. My name is Matt Bisanz, and I'm a partner in Mayor Brown's Washington, D.C. office and a member of our financial regulatory practice. My co-presenter today, also based in the D.C. office and also a member of our financial regulatory and enforcement practice, is my colleague, Kerri Webb. And as I said, today's topic that we'll be talking about is one that does not get a lot of press because it does only come around every 5 years, and it is on the ministerial end of compliance requirements. But it's one that affects a large number of U.S. businesses, and so that's why we thought it was important to talk with you about it. And so by way of background, in the U.S. Department of Commerce, there's the Bureau of Economic Analysis, which is a statistics agency that collects information about the U.S. economy. When you hear things saying that X country is the largest trading partner of the United States, or there's been an uptick in foreign investment from Y country into the United States, this is the agency that generates that information. And one of the topics that they research and study is on the cross-border business and ownership of U.S. entities. That this is, again, goes to the foreign direct investment in the United States by other nations. And specifically, one of the sets of statistics they publish is on international transactions and direct investment positions by foreign persons in these U.S. enterprises. And to develop these statistics, they require U.S. businesses that are fully or partially owned by foreign persons to make certain filings. And this is under the Historical International Investment and Trade Services Survey Act. These regulations are, again, pretty arcane, but for some U.S. businesses, they're required to file these reports every year. They receive a notice from BEA saying they're required to file them. In some cases, it's at the time a transaction is done. When a foreign business invests in a U.S. enterprise, that's the BE-13. And so when a foreign business invests in a U.S. business enterprise, it's actually on the target, the U.S. business, that they are required to make a filing with BEA to say, hey, we have a foreign investor in us now. And based on those filings, again, BEA will select a sample who's required to make filings on an annual basis. And that's the BE-15 that some of you may be familiar with. But the beauty of the BE-15 is that it's only required if you are contacted by BEA. So if you never hear from BEA, if you don't get a letter in the mail, you don't have to file the BE-15. That is not the approach that applies with the BE-12. The BE-12 every 5 years, so it's not an annual requirement, but it is a different animal. It is one that applies if you have foreign investors. So if you are a U.S. business enterprise, and Kerri's going to talk more about what that is, you have to file the BE-12 as an affirmative obligation. Now, there is a chance BEA may contact you to remind you of the BE-12. That does happen to some people, particularly if you are already on the BE-15 list. And in that case, you would need to file or show why your status has changed and you shouldn't, you no longer have foreign owners or some other reason why you would be exempt. But so I don't want to say that there will never be a BE-12 notice, but it is an affirmative obligation to file the BE-12. So you should not be waiting for a notice that as soon as it gets on the BEA's website, you will need to be in a position to assess your filing obligation and figure out what to do. But to tell us what it is you will be doing, I'm going to turn things over to Kerri.
Thanks, Matt. I'm going to start out with a brief overview of the BE-12, including the purposes of the survey, the types of information businesses have to report, and which business enterprises are required to file the survey, as well as the due date. Every 5 years, as Matt mentioned, instead of conducting its annual BE-15 survey, the BEA conducts the BE-12 survey. The BE-12 is BEA's most comprehensive survey on the financial and operating data of foreign-owned U.S. business enterprises. BEA uses that information that's collected in the BE-12 to measure the size and economic significance of direct foreign investment in the U.S., as well as measure changes in foreign investment over time and assess the impact of foreign investment on the U.S. economy. So this year is a BE-12 reporting year, and the BE-12 will request data on a business enterprise's fiscal year that ended in calendar year 2022. Under the Internal Investment and Trade Services Survey Act, the information that business enterprises report will be confidential, even as to other government agencies. Use of this information is basically limited to BEA's analysis for developing reports on the U.S. economy. The survey will request information about each business enterprise's ownership, including the identity of the business enterprise's direct foreign parent and the ultimate beneficial owner. The survey will also request information on the business's holdings, industry classification, things like sales, employment, imports and exports, and transactions between the U.S. business enterprise and its foreign parent. Business enterprises also must report on select financial and operating data and provide any annual financial statements. It's important to note here that businesses may not calculate or track some of the data in the way it may be requested by BEA in their normal course of business. So business enterprises may need to calculate or recalculate certain data based on BEA's requests and specifications. Banking and insurance businesses should also note that BEA has special reporting requirements for those activities. So that's a general overview of the information that businesses will be required to file in response to the BE-12. There are a few different versions of the BE-12 form with different minor differences. And you might be wondering which form your business is required to file. There's 4 different types of BE-12 forms, and the exact form each business enterprise files depends on the business's size, whether it's majority foreign owned, and whether the business is actually exempt from filing. So U.S. business enterprises that are majority foreign owned and have total assets, sales, or gross operating revenues or net income of more than $300 million must file the BE-12A. Note here, if any of those values exceeds $300 million, the majority foreign owned business enterprise must file the BE-12A. So for example, if the business's total assets exceed $300 million, but its net income does not, the business must still file the BE-12A. Next, majority foreign-owned U.S. business enterprises that have total assets, sales, or gross operating revenues or net income of less than $300 million, but more than $60 million, must file the BE-12B. In addition, minority foreign-owned U.S. business enterprises that have total assets, sales, or gross operating revenues or net income of more than $60 million must also file the BE-12B. Businesses that have total assets, sales, or gross operating revenues or net income of $60 million or less must file the BE-12C, and that's regardless of whether the business enterprise is majority or minority foreign owned. And lastly, if the business enterprise is contacted by BEA to file, but is not actually subject to the reporting requirements, the business should file a BE-12 claim for not filing. So this leads us to ask, which businesses are required to file? Unlike the annual BE-15 survey, as Matt mentioned, that BE-15 survey is only required for entities that are actually contacted by BEA in a given year. And the BE-12 is different in that it must be filed by all U.S. entities with a foreign voting ownership interest of 10% or more and all U.S. affiliates of foreign parents. Like Matt said, BEA may individually contact some businesses to remind them of the reporting obligation, but businesses that meet the threshold for reporting must file regardless of whether or not they are contacted by BEA. So if your business meets the threshold, don't wait to be contacted or fail to file even if you aren't contacted. The definition of a U.S. business enterprise for reporting purposes of the BE-12 is really broad. It includes not only legal entities, but also unincorporated entities, including branches and other unincorporated ventures, as well as real estate, land, and land rights. So for real estate specifically, the filing requirement applies to real estate owned for profit-making purposes. If the real estate is held, for example, for personal use of a corporation owner or is used as the owner's primary residence, there is no reporting requirement. There's also no minimum asset or revenue threshold for filing the BE-12. Even if the business is inactive or has no assets, it still has to file. As long as the business was in existence and at least 10% foreign owned at the end of the business's fiscal year ending in calendar year 2022, the business enterprise must file. Now, there are a number of limited exemptions to the BE-12 reporting requirement that may apply to certain business enterprises. For one, only the top tier U.S. affiliate needs to file a consolidated BE-12. If a lower tier affiliate is, for some reason, contacted by BEA to file, that affiliate should file the BE-12 claim for not filing and refer the request to the top tier affiliate. Another exemption is that if a business enterprise was no longer in existence or no longer 10% or more foreign owned at the end of the business's fiscal year ending in 2022, the business does not need to file. Certain private funds are also exempt from filing the BE-12. If an exempt business is contacted by BEA to file, again, the business should submit a BE-12 claim for not filing. To determine whether a foreign person has a 10% or more ownership interest in a U.S. business for purposes of the BE-12, the interest is generally based on control of management decisions rather than equity. For partnerships, partners are presumed to have a 100% voting interest that is shared equally. Limited partners are presumed not to have a voting interest in a U.S. business enterprise unless the ownership agreement provides limited partners with control. For limited liability companies, members are presumed to share 100% of the voting interest equally, regardless of the division of equity or the designation of a member as the managing member. Note that for businesses with multi-tier ownership, voting interests are multiplicative, not additive. That's different from the banking control rules. So that's a summary of the businesses that are required to file or potentially exempt from the filing requirement. The last thing I'll touch on is the due date. If you are paper filing, the BE-12 is due on May 31st, 2023. BEA also has an e-filing system. If you are e-filing, you get another month. Those e-filing submissions are due on June 30th, 2023. I'll now turn it back over to Matt for some changes to the BE-12 survey since its last iteration and to wrap us up.
Great. Thanks so much, Kerri. I really appreciate that informative summary. Unfortunately, we do not have a form in place yet. The BEA has not released the form. They've released the rule that Kerri talked about, but we are still waiting for some PDFs on their website. And for any of you who've submitted BEA forms before, you know that the PDF is the way to make the filing either through mail or electronically, that there is not an e-filing system that works really well. It's an e-filing through a PDF, which is truly arcane, but it is the way we do these e-filings. So we're looking forward to seeing what the PDF looks like this year. But in the rule, there was discussion of some of the modifications that BEA will be making. There will be a separate collection of the investment and income information for unconsolidated U.S. affiliates and foreign entities. Previously, this was collected on a combined basis, but now it'll be done on a more disaggregated basis. There will be additional questions regarding the reasons a U.S. business enterprise might have changed its activities or structure since the last report was filed. There will be additional questions on the BE-12A linked to the sales data for intellectual property rights and advertising. where there isn't a clear link between the industry of the sales of and the type of services supplied, that BEA really gets into some minute categories particularly for intellectual property rights and services. And they, for many people who are not in those industries or who don't have a significant footprint, it isn't a concern. So a lot of financial institutions won't have an issue there, but for many industrials or other types of corporates who have large intellectual property holdings, this can be a significant issue. There will also be additional questions on the BE-12 form to collect sales data related to cloud computing services, data storage, and digital intermediation services. That BEA tends to go through some phases where it likes to collect specific information. So a few years ago, we saw the first questions related to cryptocurrency holdings. And now with cloud computing becoming more prevalent, not just for some of the largest U.S. Corporations, but more generally, as more people are providing cloud computing and similar digital intermediation services, BEA would like to collect data on that. The BE-12A will eliminate certain types of petroleum and mining expenditures, and also some types of commercial property holdings from the state-based schedule. That previously you had to report fairly granular holdings of property in every state. This often was not relevant to businesses that did business either in only one state or that had holdings only in one state. And so was not the most relevant, and it is being eliminated. There also will be a scaling back on the BE-12A and BE-12B forms of information on investment transactions within a reporting group, so between a U.S. affiliate and the foreign group, to only include certain types of foreign parent information and other things involving smaller U.S. affiliates who maybe aren't picked up in other questions. So these are some of the changes. We'll probably see some more in the final rule. There tend to be some that are subtly embedded in the rule, and also thinking about how to approach the BE form, the BE-12 series form. I think there are some points we'll touch on that people may have to remember. That, as Kerri mentioned, there is a private fund exemption. It typically is narrowly construed to certain types of investment funds that qualify under the securities laws. And one of the points we've often found is if you qualify for the exemption from the BE-12 or BE-15, that often means you become subject to the reporting requirements of the Treasury International Capital series of forms, which are an ongoing series of forms that collect information on cross-border money exchanges that are not direct investment issues. So if you do determine that you are a private fund and are exempt on that basis, then you need to consider if you have a TIC filing obligation, or if you've had one. And so that's one issue that we often encounter as to why the private fund exemption is not all that it's cracked up to be. Another issue that we often encounter with clients that Kerri touched upon is the consolidation point, that we are looking at the consolidated U.S. entity downward, which is why you don't need to file for all of your consolidated subsidiaries. But if you are in one of those, say a variable interest entity, a joint venture arrangement, the rules can get quite complicated because the consolidation accounting rules come into conflict with the BEA's notions of control over a partnership, which, as Kerri said, has its own set of presumptions, or a way an LLC works, which, again, thinking of it as a managing member as not being the person who necessarily controls, thinking of all partners as being presumed to control. These are things that are not common in either the corporate or tax settings, and so it doesn't flow through to an accounting basis, and it can require a great deal of effort to figure out when do you need to report, when do you maybe split up the U.S. reporting, that there are circumstances where you can report a consolidated group separate from its unconsolidated affiliates in the U.S. It requires consultation with counsel and in some cases with the BEA, but that is one of the complexities for larger U.S. businesses. The other point that we often encounter with clients is one that I'm really glad Kerri focused on it at the beginning of her segment, is the low thresholds for filing the BE-12A, that $300 million threshold. It's a lot of money to an individual like you or me, but it's not a lot when you start talking about revenue and assets, that if you're in an asset-heavy business where maybe you have large amounts of land, where you have large amounts of goodwill or other types of assets that you're holding, or if you're in a high volume business, low margin, high volume business, it can be very easy to trip that $300 million threshold. And the difficulty is the BE-12A is a truly complex form. It is dozens of pages long, requires detailed accounting data. Beyond hiring counsel, you'll probably need to get your internal and maybe external accountants involved. And if you're a U.S. business who has a small passive foreign ownership, you might not be used to reporting data at that granular level. That if you're a private company that is owned by has a controlling passive foreign investor who really is not involved in your operations, your accountants may not routinely produce the data the BEA requests, and that can require a fair bit of effort to standardize and normalize the accounting data to the BEA systems. And so that's a major challenge that we see for non-public U.S. companies that have a significant passive foreign investor, because in many cases, the passive foreign investor will not be involved in the accounting and reporting by the U.S. business. They may tell it to make sure it reports, but they won't be involved in it. And so we'll get questions of, well, we're this small private, we don't even maybe have a public company audit for SEC purposes because we're a private business. But we have now all this granular information that the BEA is requesting. Another aspect of BE-12 compliance that I want to dwell on is that while, as Kerri said, the BEA won't use the information collected for enforcement purposes, this isn't stuff that's sent to the IRS, this isn't used to look at other types of compliance issues, the BEA does use this information for its own statistical purposes. And so just like filing a BE-13 with a large U.S. Business acquisition on it may get someone added to a BE-15 list, filing a BE-12 that shows a large U.S. Enterprise owned by a foreign business could result in triggering a BE-15 filing obligation ongoing. So while the BE-12 is a every 5 years basis, bear in mind that you may get a notice next year saying, okay, you've now been added to our BE-15 sample pool. The BEA optimistically estimates that there's, I think, about 25,000 BE-12s that will be filed. I think it probably will be more than that. But that was their estimate in the rulemaking that Kerri mentioned. And of that, only a small fraction will become BE-15 filers, probably less than 10%. But those are still large numbers when you think about it. It's done on a consolidated group basis. So if you are a large private company in particular, there's a good chance that your BE-12 may turn into a BE-15 filing obligation. The other part to this that is a thing to keep in mind is that many of the BE-13 obligations are done only for the initial filing when someone crosses over the 10% foreign ownership threshold. And so there may be outdated information on file with BEA if you've had changes in your structure since you initially crossed and filed that BE-13. And in some cases, it can take time to update those. BEA does not publish where it gets all its information from, and so while the BE-13 is one source, there's also things in in state corporate registries that are used, and other types of public information that BEA uses to send out survey solicitations. And so there can often be bad data in the BEA system that you will need to correct. That we've spent years trying to update addresses for some clients, which can lead to lost notices, which is in itself an annoying incident. So the upshot of this is that business enterprises with unincorporated businesses or including unincorporated businesses, land and real estate. Again, huge broad definition. If you think about a foreign business that has acquired real estate, may not have any employees here, may not have any compliance infrastructure here, but somehow that real estate is expected to complete a form and send it into BEA. And so all of these U.S. businesses with foreign ownership should be thinking about whether they will need to file a BE-12 report this year. They'll need to discuss some of the filing requirements with their relevant owners, and also, maybe even set up an email subscription to the BEA website. But we're here to help you. We're always happy to talk about these topics, and we realize that this is an imposition every 5 years that you may not have seen. You may not have been relevant to you in 2018, may not have been relevant to your role then, but we are here for you. And now to close us out, thank you, Kerri, and thank you to our audience for listening. Listeners, if you have any questions about today's podcast or anything else related to the Global Financial Markets Initiative, please email us at gfm@mayorbrown.
We hope you enjoyed this program. You can subscribe on all major podcasting platforms. To learn about other Mayor Brown audio programming, visit mayorbrown.com/podcasts. Thanks for listening.